to the Inner Circle Boardroom's Backstage Pass. My name's Kate Chohan. This is a channel for professionals on the go, interested in business, finance, and leadership. My objective with this channel is to create content that informs and educates. I'll be bringing you special guests to discuss current market affairs with entrepreneurs, investors, CEOs, and senior management teams. If you enjoy this content, please don't forget to subscribe. Click on the red bell icon below. So our special guest for today is Mani Rangarajan. He's a seasoned executive with extensive global experience, predominantly around the internet and financial services. Mani initially started his career working at Citigroup. After working for Citigroup for a number of years, doing risk management review of several corporate banks and consumer bank businesses in Europe, Africa, Middle East, and Asia. So for the last 5 years, I've been working with several startups in a very diverse ecosystem ranging from payment processing, e-commerce, big data, and social media. So Mani, really grateful to have you here today. I know that you're dialing in from India, so really appreciate you being here with us to talk about what's going on in the ecosystem and what you're seeing at the moment. For the sake of our audience, can you tell us a bit about the turnover and the size of your most current role?
So I'm part of the Elara Technologies Group, where I'm the Group Chief Operating Officer. Elara Technologies is backed by several renowned investors. So on the strategic side, we have Real Estate Australia and News Corporation. We have SoftBank banking us. And we have quite a few venture capitalists on the cap table. I just mentioned two. So one is Excel Partners, which is present in Europe as well, and which has a large presence in the US. And the other is Seth Partners. So we fit squarely within the real estate vertical, and we run three businesses, or maybe I should say two. One is an advertising platform, which comprises housing as well as Makan, where we serve developers or builders, agents, who you may call as brokers or realtors, and now owners as well, owners of individual properties. We focus a lot on the residential space, though recently we have been making the occasional foray into the commercial space. And the other is Proptech, which is a brokerage business where we help developers sell new homes to Indian consumers, whether they're located in India or worldwide. And we are one of the largest companies running a marketplace and brokerage in India. And we have about 1,300 employees, and we are growing at about 30 to 40% every year. We are growing much faster than the market. And in terms of demand aggregation through housing, Makan, and Proptech, we are the largest in India.
How has the pandemic impacted the commercial aspects of your business? Let's get straight to numbers.
We were fairly devastated in April in terms of the overall business, both on the advertising side as well as on the transaction side. We are very technology oriented in our approach and have a strong sense of technology in our DNA. And we were able to recover very, very quickly because even prior to COVID, we had focused a lot on digitization. We are one of the pioneers of Proptech, as it's popularly called. And we have with us a whole suite of products which are digital solutions, which range from doing virtual tours, walkthroughs, 3D videos, virtual reality, augmented reality, drone shoots, and online booking platform. So in April, what we did was both on the housing side, which is a B2B business, and on the Proptech side, which is a B2C business. We switched to digital mode immediately. And what was very surprising to us was that the whole ecosystem has become so digitized in India that both consumers as well as the customers, whether it be a developer or broker, all of them responded very, very well, right? So we had a very damp first quarter, I should say, more so on the housing business because housing is where people want to advertise and get in front of the consumer, as opposed to Prop Tiger, where people want to buy homes. So, what we actually noticed during the period of April to June was that people wanted to come online and buy homes. So, we saw quite a few bookings where people came online and paid for the home. It was just token amount that they paid, but they even so much interest that they went ahead and booked a unit for themselves. And subsequent to June, we have seen a huge improvement in our business, both on the housing side as well as on the PropTiger side. On the housing side, we have seen demand grow up by about 60% pre-COVID levels. Right, I'm not even talking of demand going up to the COVID level, but 60% above pre-COVID levels, uh, both on the buy side as well as on the rent side. Though I should say that it's been stronger in terms of people wanting to buy homes rather than wanting to rent homes. And on the prop tiger side, we have been doing phenomenally well. So, in fact, over the last 3 months, we have delivered year-over-year growth uh, in this COVID environment. And it seems to me like the worst is behind us, and we are going to now take off for the rest of the year.
What do you think's driving that growth? Like in the UK, we had stamp duty, so anything up to £500,000, you don't have to pay stamp duty. But not only that, people were looking because there was pent up demand as well. So, what are you seeing through your lens that's driving this?
That's a great question, Kay, and I think you hit the nail on the head in terms of stamp duty. So we have seen stamp duty being lowered in Maharashtra till December, and even after that, till March, the rates are going to be lower than pre-COVID. Uh, but that's not been extended across all states. Uh, but fundamentally, this pandemic has changed our lives forever, right? I think everyone, who's tuned into this video, will agree with me that it's brought us to a new normal, and I don't think life is ever going to remain the same. What this pandemic, I think, enforced, in us and reinforced in the minds of the consumer, is that you're only safe in your own home, right? I mean, you could be renting a home, or you could be living in a co-living facility or a student housing facility, but ultimately the family is safe within their own home. So I think that's the fundamental belief that people carry in their minds, and that has to a large extent helped push demand. The second thing is that working from home has become more or less the norm these days. Right? And even if you look at the way commercial real estate is evolving in India during this financial year and probably over the next, you'd find that a lot of the majors, I'm talking about, let's say, the Accentures and the IBMs of the world, are all encouraging people to work from home. And further, they're probably going to move into a hub and spoke model where they're not going to have like one single uh, office, which is millions of square feet where thousands of employees sit, but they're kind of going to open satellite offices probably across a particular city, right? So, given this dynamic, what we are seeing is that people now feel that they no longer need to uh, reside close to where they were living. Sorry, where they were working, rather. And so, usually, when offices are located close to the central business districts of each city, the properties are far more expensive. So what people have found is that they can move to the outskirts of the city, go more uh, to the suburban areas rather than stay within the city. And this is a phenomenon which is not localized to India. It's there in the U.S. as well, where you're seeing like cities like San Francisco and New York experience a lot of vacancies, and people are moving outside the city, right? So when people are moving towards the outskirts of the city, obviously the prices there are more affordable. And one of the things we have seen in India is the growth of what we call as a tier two and tier three cities, which are the smaller cities. So the tier one cities are the top 8 to 10 cities, and then you have around 85 tier two and tier three cities. So you're finding that people are wanting to move back to the areas that they came from. So it's a reverse migration of sorts, right? So people find that rather than pay an expensive rent, right, in the central business district, they'll be able to afford a larger space, right, in the outskirts of the city. In fact, in housing, right in the middle of the lockdown, we did a survey of over 3,000 of our consumers, and about 50% of them said that they would need to continue working from home post the pandemic. And of the 50%, about 60% of them wanted to actually upgrade to a larger home. Right? And when it comes to upgrading a larger home, it becomes unaffordable to pay rent in a central business district, but then you can afford to buy a home in the outskirts. The other thing that we noticed with a lot of the consumers is that they felt that real estate is the best investment form, right? Best investment class. Now, India has not seen a lot of appreciation in real estate over the last few years, but there's not been much value erosion, right? And compared to how volatile the other markets are, such as markets for either gold or for stock or mutual funds, people find a residential home to be a safer bet when it comes to investment. Also, the Reserve Bank of India, which is the central bank of the country, they reduced interest rates by about 115 basis points from March till when the lockdown started. And so that's kind of eased the home loan interest rates. The home loan interest rates are near the 15-year low. So all these are factors that have helped drive up demand for real estate, uh, right, over the last couple of months.
India has 29 states. Are there any trends that you'll see that people are moving to?
Well, it's too early to talk about trends. And when I'm talking about demand for homes in tier two cities, we are talking of online demand. We have not seen those translate into actual transactions as yet. But when I look at cities, in terms of individual cities, we are seeing in the south, for example, we are seeing Coimbatore, um, Visakhapatnam and Vijayawada in Andhra Pradesh. We're seeing Jaipur in Rajasthan. We're seeing Lucknow in Uttar Pradesh, Chandigarh in Haryana. Uh, Goa, for example, has been a great second home destination. And then we are seeing a couple of other cities across the country. So overall, we are seeing about 15 to 20 cities, which is contributing to strong demand.
Are you seeing that people are doing a lot more searches but just not transacting?
Well, housing and Makan, they operate at the top of the funnel, meaning users come to do the search and discovery on these platforms. And what we have been seeing from talking to advertisers over the past few months is that about 90% of people seem to be searching online. So India K, as you know, has a huge base of internet users, about 420 million, the second largest user base behind China, larger than that of the US. And in fact, the user base is expected to double over the next 5 to 10 years to about 800 million. The second thing is in India, data has become very cheap. So the cost per gigabyte of data is the lowest in India compared to anywhere in the world. So considering this, there's been like a massive increase in the volume of searches, for residential real estate. And from the trends that we are seeing on PropTiger, we are seeing transactions grow as well. So the three large markets in India, amongst the tier one cities, one is Bangalore, the second is Pune, and the third is Mumbai. And we are seeing record results in these three cities over the last couple of months. Uh, the third is that we are seeing some amount of confidence back in the market on account of developers. So we are starting to see new supply as well. So there are a lot of brand name developers who are going to be launching new products right over the second half of the year. So we expect the second half of the year to be far better than the first half of the year. The other thing is that developers are also incentivizing users to buy. Uh, we haven't really seen like a huge price decline in real estate. That's something that we actually said when the lockdown started. So there were a lot of people who said that the real estate prices are going to go down by as much as 20 to 25%. And honestly, if that sort of price decline were to happen, it would mean either of two things. One is developers would have to go out of business because they cannot, do with 20 to 25% lower cash flows. And second, it would mean that the economy was crashing because it would mean that people were only able to pay like 20 to 25% lower prices. That would have meant that the economy was going bad. So we haven't really seen a lot of cases where developers have deeply discounted their products. Instead, we have seen developers, come forward with more lucrative and more flexible payment plans. So, for example, you pay 10% down, and you pay 90% on possession of the property for an under construction home. So in India, unlike a lot of the developed countries, and this is for the benefit of your viewers, most of the developers tend to sell as they are constructing a home. In some countries, developers finish construction of the home and only then start on the selling process. Right? So developers haven't really discounted their prices. Rather, they've come forward with more flexible payment offers. And in some cases, developers are even going for so far as to offer a price protection plan, meaning if the prices were to go lower over the next 6 to 9 months, they would compensate buyers for the differences in prices.
And is it just developers that you are working with, or do you work with other subsets?
Yeah, we work with brokers or the agents of realtors, depending
Yeah.
on the name which you call them. And that market has actually recovered far more stronger than developers has, right, on the advertising side. And we also work with individual owners who either want to sell their homes or list their homes for rent.
Obviously, every country's seen very record high unemployment rates. So that's going to impact borrowing as well, particularly from the banks. Does that concern you in terms of what you're seeing at the moment and what you're forecasting going forward?
That's a great question. So, okay, actually, when we started selling homes on PropTiger, in April during the lockdown, that was one of the concerns that we had. Was that people may pay a token amount for the home. When I say token amount, you're not paying 5% or 10%, but you're paying, let's say, 1% of the value of the home, right? Just to show your intention that you want to buy the property. And developers were far more relaxed in that developers said that when the lockdown is over, consumers will be given about 30 days to come to the site, look at the product, and if they didn't like the product, they would be refunded the token amount. There were a couple of developers who said that there would be no refunds, but there were others who were willing to refund about 80 to 100%. Uh, so we were concerned that if somebody were to, let's say, just pay 1% down, right, it's not really a significant amount in terms of the property value. And 1%, paying 1% down without availing a bank loan, we thought that cancellation rates would go through the roof. So that's something which we were very, very concerned about because we are very, very particular about maintaining revenue quality and controlling cancellation rates. And we have been very closely tracking cancellation rates over the last few months. But so far, we haven't seen a spike in cancellation rates across the country. So we have seen some increase in cancellation rates, but that's been localized to a few products of a few developers. So I wouldn't generalize it and say that cancellation rates have risen across the country. And what's more, when we called up consumers to understand why they were canceling, uh, there were about 40 to 50% of them alluded to either losing their jobs or or pay reductions. But the vast majority of consumers have continued with the transaction. They have paid the 10%, they've secured the bank loans, and they've also registered the property in their names. So overall cancellation rates haven't really spiked up. In fact, in the research that I mentioned a short while ago on housing, where we surveyed about 3,000 home buyers across the country, about 50% of people whom we surveyed said that they intended to go ahead with their buying decision. But they wanted to push out the buying decision by a period ranging from 3 to 6 months. About 30% of them said about 6 to 12 months, and about 20% of them said that they had indefinitely put their plans on hold. So we're still seeing a very strong uh, user interest in buying homes. In fact, I was looking at the bank credit data across the country, and one of the things which is really trending upwards is personal loans, which are taken by consumers. And about 30 to 40% of the personal loans are towards home loans, right? So this is really, really interesting and gives me a lot of confidence that the worst is behind us and the market is here to stay.
So that was my actual next question. Do you think we'll see a slowdown and depreciation?
I don't. I think we are going to see good growth from here. So when you look at the economic data and the forecasts, the IMF has said that the world economy will contract by about 4.5%, right, for this year. And in the case of this fiscal year for India, which is from April 2020 to March 2021, I anticipate that the Indian economy will contract by about 10 to 12%, right? So the Indian economy contracted by about 23% in the first quarter of the year. In the second quarter, I think the contraction would be about 12 odd percent, and I think the declines uh, more would be around 6 to 8% for Q3 and Q4. And I think by the beginning of next year, which is when I think we all start getting vaccines for COVID, I think growth rate will start coming up. Uh, I don't think India will grow at 7 to 8% in 2021. I think we'll probably end up growing about 5 to 6%. It's going to take a long time for all economies to recover, not only that of India. But 2022 onwards, I think the economy will simply skyrocket. So I think that the worst is behind us. In India, the unemployment rates skyrocketed during the initial days of COVID. So it was about like 23 to about 24%, and there were about 120 million people across the country uh, who were unemployed. But since then, unemployment is hovering at about like 8 to 9%. So we're seeing real estate recover. We've also seen the auto industries recover. We're seeing the small and the medium uh, industries, which tend to be the backbone of most of the economies across the world. We are starting to see them borrow, uh, given the bank credit numbers that we are seeing. And so we are seeing a gradual recovery of sorts. And luckily for India, I think the agricultural season is going to be pretty strong, expecting good harvests. And there you probably see a lot of the casual labor going there and being employed. So overall, I'm pretty optimistic, over the next few quarters. Uh, we have to tread cautiously, but remain optimistic. Uh, and I guess it's the same for everybody till a vaccine is found, and still when vaccine starts getting produced and distributed across the world.
So you've got 1,300 employees currently at the moment. You have an optimistic outlook, which is great. How is your operating model going to change? Talk us through some of that growth and whether you'll be looking at keeping the 1,300, or will those roles change?
As a company, we are very, very bullish about real estate in India. So real estate is about $180 billion in terms of market size. It's second largest contributor to the GDP, and has been growing at about 10 to 11%. And over the next decade or so, we think that the CAGR for real estate could exceed about 20%, and we are likely to see about $1 trillion in market opportunity in real estate. Um, and from a company perspective, we are very excited because India has evolved a lot, right? I mean, the scale at which the internet is growing is pretty good. Uh, India has skipped the entire desktop generation. So if you look at the traffic of any portal, it's around 70 to 80%. The data is becoming cheaper. A lot of people are downloading apps and using apps. Digitization is growing pretty rapidly. And we are seeing the emergence of a lot of new markets. So, for example, we are looking towards commercial real estate, which will make its comeback in the form of at least co-working spaces. We are seeing a huge market opportunity in co-living and student housing. We are seeing the emergence of new market opportunities in the form of senior living as well. And in general, over the last few years, there's been a lot of foreign direct investment in real estate, in residential, commercial, retail, logistics, and in warehousing, not to mention hospitality. So overall, the sectoral dynamics are intact, and we consider COVID to be a setback, right? Uh, which all of us have to go through across the world. So we've been very, very careful. So we didn't do any layoffs, right, at the onset of COVID, because we're very, very confident of the market kind of coming back. Um, we did understand that we would have to work from remote for a pretty long time. And thankfully, as a company, given that we're a technology company, we had systems and processes in place, continuity of business plan perspective, and which facilitated people working from homes. And so far, we have seen productivities have actually increased, right, across almost all operations teams. So when you look at core operations, or when you look at people doing housing studio work, where they're creating virtual reality, when you look at the calling team within the company, or when you look at sales team, we have largely moved to working from home, and we expect that trend to continue almost on a permanent basis. So we think that going forward, we will not have everybody come in every day a week, but depending on the team, we'll have people come in, let's say, a couple of times a week. And it makes for a safer working environment, right? And given the kind of collaboration and productivity that we've seen, we think that's the right way for us to go. And it also helps us save considerable costs on the G&A side of things. In terms of investing and adding to our workforce, we will be doing that. We are seeing, like as I said, huge markets and huge pockets of opportunity across the country. So there are certain areas where we will be adding people to cater to the increasing demand.
Let's just talk about that operating model as well, because you've said that you don't anticipate your workforce to return anytime soon. Prior to COVID, you were housing 1,300 people. Will you be looking at the way you use real estate yourself? Will you be downsizing?
We're looking at downsizing certain offices across the country because, as I said, we are moving to a remote working model where people will be coming in a couple of days a week. So we don't need as much space as we used to. So we will be really optimizing our use of real estate. Right? And that's a thought that a lot of companies across the country have been having. So if you look at companies like Google or Twitter or Facebook, a lot of them have been encouraging people to work from home. I think some companies have said people can work from home forever. Others are saying that people can work, from home for the next year or so. And in fact, even in Bangalore, in the commercial real estate side, I've seen some of the large organizations give up office space. So I think this is a period where people are going to be extremely cautious so far as expanding real estate is concerned. Uh, because more than anything else, more than a cost perspective, uh, you know, employee safety is very, very important, right? So the more people you have, the more chances you have of infection spreading. In fact, we are seeing that kind of trend also shift to developers as well, right? So earlier on, people could walk into developers' sites, right, and look at homes. But developers have become more discerning, and they are allowing site visits only through appointment. So people have to secure an appointment before visiting a site. And even on for example, the broker's side and on the owner's side, uh, some of the paid brokers and owners are using virtual tours where they can show the property virtually and then have the person come in to do an inspection rather than have somebody come in physically to the site.
Opportunities are you seeing at the moment with all this chaos and mayhem going on? Looking beyond 2020, where would you be looking to invest?
Well, we think that the market has taken a leap forward in terms of digitization and moving online. We have had a fairly strong sense of buyers wanting to come and do transactions online. So we think that that will continue going forward, uh, at least for brand name developers. We are seeing that trend. The second trend, which I mentioned, was in terms of doing the whole site visits and home inspection. So we are seeing a lot of that move online. So going forward, we think that buyers will not only use the internet for searching properties, but also discovering properties and then almost making up their minds on which properties they want to go in and inspect. So, in other words, if people were visiting, let's say, 4 to 5 homes before deciding to either purchase a home or take a home on rent, we're probably going to see that reduce from 1 to 2. We've actually seen that during the COVID. So the ratio of the number of site visits to transactions actually declined and has been declining ever since. So people are going to make fewer site visits, and people are going to rely on the internet to shortlist making decisions. The third thing which we are seeing is the huge adoption of content. Uh, so earlier on, we people used to focus on a listing, right? So people used to, let's say, go to locality A and list down the properties of developers. But now what people are doing is that they're using online to shortlist the properties that they want to buy. So there's a lot of focus on the side of the sellers, developers, or brokers to differentiate their products from others. And so a lot of them are moving towards showcasing their properties virtually. In fact, we have done webinars where we have had a live drone shoot, right? So there's a drone which is flying over the construction site and the surrounding areas. So people are experiencing sites virtually. That's going to continue. And in fact, we've done record business on the housing studio side in terms of these products. So we expect all of that to continue. The fourth is even on the sales side, we are seeing like a lot of sales efficiencies. Uh, People are moving towards a digital sales solution. So one of the first things which we implemented during the lockdown was digital term sheets and having people pay online. So we avoided having to print out documentation like it's usually done in India and get the agreement signed physically. So we've had people signing documents electronically and make payments online. And in the smaller cities, which is tier two, tier three, we don't have a physical presence, but we have seen developers and brokers buy products online, right? So from a B2B, sales is moving online where there's no touch point, right? So people look at the product online, they read about the benefits of the product, they get a demo of the product, and then they buy the product online, either through direct transfer of money or using like their credit cards and debit cards. So we are seeing a lot of uptake of that. In fact, we have sold properties in smaller cities online without the buyers even going and visiting the property, right? In fact, last weekend we did like a couple of sales where we just used video calls. We showed them the property virtually, and people signed up for the property. Of course, here the developer was a branded developer, so people felt very comfortable. So overall, over the next few years, we are very very excited because from a sales efficiency perspective, a business efficiency perspective, we see the market moving online. And so sales is going to become very efficient. Of course, I'm not saying that we will sell all products virtually and all people will buy virtually, but it's only a matter of time before people start adopting to this.
I've seen in the UK where what they've started to do, the developers, is they've done a try before you buy. So it's that experience, feeling. The innovation is around how you can make people feel and touch that product or service.
Right. So more than moving, right? I mean, the thing is, India has like a huge inventory overhang. So there are about 800,000 units which are unsold in the country. Right? So there's a lot of offering for a buyer to choose from. So the choices are pretty enormous. This is just on the new home side, and besides that, you have resale homes as well. For example, in a city like Bangalore, it easily has about 120,000 to 130,000 units. So there are a lot of developers who are competing for eyeballs and competing for buyers. So the internet and tools like, as I said, the drone shoot and virtual reality, it offers a very interesting way for consumers to understand the product, right? And for sellers to also position the product because every product has a unique proposition. Some products offer convenience in terms of being located close to the central business district. There are some homes that offer open spaces Some offer large interior spaces, some offer amenities. You have sports cities. So the seller has to position the product appropriately in the minds of the consumer, and tools like what I described really help you do that.
You spoke earlier about data being cheap. Let me just understand sort of why you think that is.
See, the thing is, India has seen like a lot of competition amongst the telecom operators. So you have Reliance Jio, you have Airtel, and then you have Vodafone Idea. So I guess the competition between all these companies has helped make data far cheaper. So 9 cents.
Which makes it great for a business like yourself, though, right?
Absolutely, that's absolutely fantastic for a business like ourselves, right? It makes all the tools that I described to you very, very accessible.
Yeah.
I remember in the early days, even like 9 to 10 years ago in India, they used to constantly buffer when you're trying to render these products, right? And that doesn't make for a great user experience. But given the data speed and how cheap data is, people are willing to spend more time online consuming such products, and the user experience is becoming very, very good, right? The other thing is, for example, WhatsApp is emerging as a huge channel in terms of communication between the seller and the buyer, and helping sellers distribute the content. So, for example, we have a product called Digitor, which was a virtual tour of a property, and that's browser based. And we have a patent in terms of the way we compress images, the way we do progressive loading, and people can distribute that across the WhatsApp so easily, right? Content syndication is becoming far more easier, even in the hands of individual sellers. So that's something which gives us a lot of confidence that the whole online piece is really going to grow quite significantly.
Talking about WhatsApp, when I spent time in India, I noticed the behavioral difference between India and Europe. They almost see it as a personal channel of communication, but I think India embraces that and it uses the different ways to communicate with people. So I want to quickly talk about investors. Obviously, you're in business to make money and you have investors as well who are looking for a return. So what are some of the demands that you're seeing from some of your investors? I appreciate they're going to be understanding in terms of, the impact, but ultimately investors want a return. What sort of messages are you getting from your investors at the moment?
Sure, that's great. That's a great question. I think a lot of people talk about raising money, but then you got to be very, very careful in terms of who you're raising money from and set their expectations. I know I'm digressing a little bit off topic, but this is one of the pieces of advice I'd like to give to entrepreneurs is that when you raise money from investors, you need to set the expectations right, and they should be with you in that journey. See, real estate as a business is very cyclical, irrespective of the country. It's going to have its ups and downs. For example, in India, goes through an 8-year up cycle, and then it goes through somewhat of a down cycle, and then the market comes back up. Right? The second is that your investors also need to be able to understand the market opportunity dimensions in terms of the overall market opportunity and the addressable market and all of that. One of the things that we have been very, very fortunate about is that we have a News Corporation in Real Estate Australia. So Real Estate Australia is a publicly listed company in Australia, has about a 60% market share in Australia, and also owns properties in Asia as well. And News Corporation owns Move and Realtor.com in the US. So both of them have a very, very solid understanding of real estate, and they are in it for a long haul. So once you have investors who understand your business, your market, and the market opportunity, and the business model, it becomes far more easier. So Real Estate Australia, for example, owns properties in Malaysia, Singapore, Thailand, Indonesia. And India is not very different in terms of a market. Of course, it's a single monolithic country as opposed to owning four different portals operating in countries far smaller than India. But the underlying business dynamics and the challenges remain the same. So they've been very, very encouraging, and they totally understand the market environment. And honestly, even though in India you see a rising number of COVID cases in India, like about 90,000 to 100,000 per day, the mortality rate is pretty low. It's about like 1.7%. And when you go on the roads, it seems like there's no COVID. I mean, it's just that everyone is wearing a mask, but it looks pretty normal. And we've also been able to deliver solid results. So the investors are firmly behind us, right? But we did tread with caution in the first few months of COVID because this is something I think no business across the world was prepared for in a pandemic of this dimension.
Let's just talk growth. You're in India at the moment, and obviously you've got international investors who are within the real estate and emerging markets. Will you be focusing clearly on India moving forward, or is there an appetite to expand?
Okay, I think honestly we scratched the tip of the iceberg in India in terms of market potential, right? Um, a lot of businesses can't look at a business opportunity the size of, let's say, $180 billion. I'm not saying that all of it is addressable market, but it's a market for real estate as a whole. And so far, we have been focusing only on the top 8 to 10 cities. We did not move into the smaller cities in India simply
Still got another 20 to go.
there are at least 20 to go. And by the time we get into the 20, I'm sure the others would be ripe for expansion.
That's a 10-year plan there.
Yeah, that's a 10-year plan there, right? And so earlier on, the challenge was getting demand online. People were willing to put up supply online, but there was nobody willing to come and look at the demand. Now with the internet growing, and vernacular is a huge audience in India.
Yeah.
For example, we have launched housing.com in Hindi for a section of the users, and we find that the time the Hindi speaking users spend on housing.com is about 40 to 50% higher than the English speaking users. And Google study pointed out that about 9 to 10 of the next phase of new internet users in India is going to be from the vernacular space. So when I look at all this, I think we probably will spend the next 10, 15 years exploring India. I know that there are markets outside of India, but I don't think there's a market the scale that India offers, except maybe China, which we don't have any aspirations to touch. So I think for the near future, for the next 5 to 10 years, we'll be focused on India. Of course, if there are other markets that open up in the subcontinent, if there's a Bangladesh or Nepal or Sri Lanka, we might take a close look at that, but we haven't even thought about it.
I kind of gauge from this conversation that you're focused on the internal market. And I kind of get that a lot when I speak to businesses, that the opportunity in India is huge. And, I've been looking at the numbers myself, and we've had this conversation before when I came to India and we spent time together, which is we already know that India's population is due to outstrip China by 2027. There's a huge market to go for just there.
There are a couple of other reasons. Okay, so one is India has the largest millennial population of any country. Yeah. It's about 410 to 420 million millennials in India. And the size of the millennial population is only going to grow, right? The second is, in India, there's a lot of value attached to buying your own house, right? So while in the rest of the world, you're seeing the emergence of a shared economy, right? And in India too, Uber and Ola are reasonably popular. Indians are very, very focused on buying a home for themselves, right? And you're encouraged to buy a home at an early age. So there are some socio-cultural norms that are in place there. The third is, I think it's becoming cheaper to buy a home in India. So, for example, in a city like Mumbai, uh, the average home price to disposable income used to be somewhere around 14 or 15 a few years ago, which means that you probably had to spend about 15 years of your income to buy a home. But that's kind of come down to around 7 to 10. So the government has launched this huge housing for all initiative, or affordable housing as they call it, and that's homes up to 70,000 US dollars. So home buying has become pretty affordable in India in cities like Mumbai. And over the last few years, if you look at the trends, about 50% of new supply has been in the affordable housing category, and 50% is sales as well. Um, so, uh, so there's kind of imbalance of some sorts. On the one hand, you have surplus of housing availability in some cities, and this is more in the luxury price segments. And on the other hand, you have housing shortage in the urban areas, particularly for the affordable homes. So it's going to be a great market for people going forward over the next few years.
Many, what do you think could disrupt your market? What are the risks to a business like yourself?
See, for us, from a market perspective, right, there has been some liquidity crunch in the market, right? Uh, so real estate developers were finding it difficult to raise money. So a lot of banks were not willing to lend to them. And there is a category of financial institutions, popularly known as NBFCs, which is the non-banking financial companies, which are largely funding developers, although the interest rates are higher than borrowing from a traditional bank. Uh, Over the last couple of years, the NBFC market has been through a crisis. Uh, so developers were not able to raise money to complete their projects. Uh, but in the recently infused government's stimulus, they have kind of eased the liquidity pressures on both the banks and NBFCs. So we are hoping that it will provide more financing to developers. So one of the things that we are very, very careful, particularly on the prop tiger side, is the quality of revenue. So there are a couple of things we look at before working with a developer. One is we look at the past track record of the developer and see whether the developer has completed and delivered projects sometime to consumers. Uh, because for us, home buying is what we are all about, and we want to deliver trustworthy experiences to consumers. So, in fact, for us, it's our vision is to provide value, trust, and transparency to consumers. And we realize that for a lot of people, home buying is once in a lifetime decision, and so we want to ensure that they are able to get value for the money and get the best product. So we are very careful in choosing developers. To see that they've actually completed projects on time for consumers. And we're very, very focused on the collectability aspect of revenue because in a prop tiger business, you typically collect money on a post-paid basis. So we also want to ensure that we get paid on time.
Yeah.
So we really look at the developer's cash flows and the ability of the developer to pay us. So even though technically, given the brand name that we have and the market opportunity, we can expand and deliver far higher revenues. We want to be very cautious. We want to grow, but we want the growth to be on a sustainable basis. We want to look at the economics of how we're growing, unit economics, to ensure that We are not burning cash. We want to invest wisely, and also we want to ensure quality of revenues. So those are the parameters we look at before we take a look at expanding investors.
Yeah, a lot of risk analysis there for you, something you're definitely used to. Manny, I've thoroughly enjoyed talking to you. I always enjoy our conversation. It's been fantastic to have you here to talk about India, the economy. Guys, I'm sure you'll agree with me. That was a fantastic conversation with Manny. Please don't forget to subscribe. We'll be producing weekly content with leaders like Manny here today. What's the best way that people can connect with you?
They can reach out to me on LinkedIn.
Yep.
Mani Rangarajan is my profile name.
Yes, well, I'll connect that into the links below. So, guys, reach out to Manny. I'm sure he'll be happy to connect with you and continue the conversation. And we'll speak with you soon. Thank you.
And stay safe, everyone. Thank you.